Welcome back to Bail Money. This is Mike again. So today I'm going to talk to you guys about how to finance a business that you're going to buy. If you're going to buy a small business from Flippa or just any other site, then you got to know how you're going to finance it. So before we get deep into this, I want to let you know that obviously if you're going to finance your business, it does involve creating more of a risk. So you always have to understand your financial position, make sure you're making a good decision. And if you don't understand how to uh, do your due diligence, then do not buy a business with financing, excuse me. If you don't understand how to essentially create your own financial statements so that you can make sure that you can forecast how this business should go and give yourself a strategy to build the business, then don't finance the business. If you're just starting out, my recommendation is to start small, get a site that's making a little bit of money, maybe a couple, up to $100, and see what you can do to grow that site to flip it first, so that you have some experience with everything that you'll need to know on growing a business online, right? If you've done it a couple of times, or if you've been in digital marketing for a while, or if you've been involved in online business for a while, and you have a good financial structure already in place, then you might you might consider it, right? Ultimately, do what you feel is in your best interest, but make sure that you do your due diligence first. All right, now that I've gotten that out of the way, I want to share with you guys a couple of things that you can do to finance buying a business, right? So number one, obviously, you can have cash, right? Or partner up with people who have cash. I would say that's the least risk when it comes to uh, bank risk, right? Like there's always risk involved. You could lose the whole entire thing that you and your partner put in. So there's still risk there, but you won't owe a bank the money plus interest, right? So next thing I want to tell you about is if you have a 401k, if you have an IRA, then you can either lend yourself money from that, or you can self-direct your IRA and use that to purchase businesses or business assets. That's completely up to you. I don't know much about that because I've never personally done it. I just know it's something that is available. Another thing you can do, and this is why we're on Flippa, is Flippa actually has financing available, right? So you can just go to the Flippa uh, financing tab, right, and get pre-qualified. So there's a couple of different types of financing that they have. I myself have actually applied for unsecured funding, but you can also get a loan, again, like I said, from 401k to buy your small businesses. They also have a revenue-based financing model, but for that one, you do have to have a down payment of at least 20% for the business, right? So what does that look like? If you're buying let's say you're buying a business for $100,000, obviously you need $20,000 down. If it's a $50,000 business, you need $10,000 down. Pretty simple, right? So the goal here is to understand what these will require. So the first thing I want you to know is if you do uh, unsecured funding, they can give you up to 100%. Typically, when you buy something with 100% financing, you'll have more, you'll have a higher interest rate. That's usually what will happen. Sometimes you'll find places that give you a favorable interest rate, but usually you'll have a higher interest rate. If you have more skin in the game, right, you put down 20%, you'll usually have a lower interest rate. However, in my opinion, the best way to finance a business is to buy a business that you can pay for with either cash or get access to fairly quickly. I have actually purchased businesses with credit cards. I don't necessarily believe that that's the best way to do it for everybody. And if I'm honest with you, there's a lot more risk involved with buying it with a credit card. You can get access to that capital really fast, and that's why I do it at times. But I would say if you're not really sure on how that number works, stay away from credit cards, right? Because that can turn south on you really, really quickly because you can go from 0% interest to like 25% interest within like a year, right? So that completely turns your finances on its head. Another thing that I would say to look for is to just go on to google.com and search business lenders. There's a bunch of them. One that I've heard a lot about is BHG, right? I've never used them myself, so this is not like me telling you go do business with them. I've also heard about Lending Tree. Again, never done business with them. But ultimately, you're going to want to find something that works for you. I would say the best bet, especially if you're just starting out with trying to figure out how to finance this business purchase, go to your local bank and talk to somebody in their lending department, see what their criteria would be to getting a loan. Ultimately, one of the major things that you'll have to consider anytime you get a loan is something called your LTV, which is the loan to value, right? So what's the value of the business and how much are you getting, right? So that goes back to that 100%, 80%, so on and so forth. There's also another thing to understand, which is your debt to income, or DTI, right? So debt to income means, let's say that you personally have, let's say that your personal income is $5,000 a month and you pay out $1,000 a month through debt. That means that your debt to income is about 20%, right? So generally speaking, you want to be under 30% debt to income, right? Now, if you're buying a business that can't provide enough income to justify and keep you under that 30%, then a lot of times you're going to see yourself getting turned down from getting financing. So you kind of want to know your numbers getting into it ahead of time. One of the things that I would suggest to do is to get an app that just basically takes a look at your finances and keeps track of everything. You can use something like Mint, something like Rocket Money, so on and so forth. But those are going to be the best ways to do this. Another one that I just recently heard about, let me see, it's Empire Flippers has their own financing team that they work with now. I'm trying to remember what it's called. Where is it at? I don't see it. So yeah, I actually will have to find them. But if you have ever looked at getting financing through Empire Flippers, or if you're looking at a site on Empire Flippers, you can find financing through them as well. Anyway, not going to try to find it now because I should have done that research ahead of time. But point is, you want to understand a couple of different things if you're going to finance your business purchase. Number one, know your debt to income, know your loan to value, right? And then also understand the due diligence. Make sure that you're doing accurate due diligence. If you're buying a business that, let's say that you're buying a business that's over $30,000, you should almost definitely, if you're buying it from Flippa, you want to definitely look at getting the due diligence package done so you can have a little bit more of an accurate look at what this business really is. I would say that if you're going above 30,000, you get this standard report. Basically, it's going to give you a deeper look at the finances, make sure that everything that they say is happening in the business is happening. Main reason why you just don't want to buy something on debt and then not have that asset be something that would perform well for you. Hopefully this has given you guys a clear view of like what to kind of think about when you're thinking about financing a business that you're going to buy online. If you have any questions, as always, drop them in the comments below. I do my best to answer those questions, and that's actually where this video comes from. It comes from somebody named Jay Royal, who reached out and asked a question about how to look at financing the business. One of the things that specifically he asked, which I want to go into now, is can you finance a business with its income? And that answer is yes. Now, here's one thing I want you to also consider is what type of a business it is and what type of financing you want to get. So let's say, for example, that it's an affiliate business, right? If this affiliate business, like this one, makes $5,000 per year, or excuse me, per month, That's about $60,000 a year, right? So how much financing would you really want to get into based on that answer? Well, if if it's me, I would be very cautious about it being an affiliate business. Now, here's why. With an affiliate business, the asset itself is content, right? There's no tangible assets to buy or sell. It's all content. So this business, even though it's very valuable in terms of its ability to put out income, can also be much more risky, because if something happens, let's say Google has an update, your site can lose 20, 30, 40% of its traffic, meaning your income is in flux at that point. If you're going to do a business, let's say you bought an e-commerce site, right? An e-commerce site, depending on if you have inventory or not, might actually make more sense if you're going to be financing it. And the reason why is because you can finance based on the inventory that you have on hand, right? So if you're financing it based on the income only and you don't have any other tangible assets that are sellable, what asset do you really have? You end up having content that you can hopefully try to sell maybe as like a course or something like that. You've got the domain name, and that's basically it. Whereas if you have an e-commerce site, or if you have a let's say a service where you have a monthly recurring revenue, that's something that is a little bit more secure in terms of your ability to count on that cash flow to continue coming in. So ultimately, that's what I would say is, like, really honestly focus on getting involved in a business that you know is going to have some tangible assets, or something that has a monthly recurring revenue model if you're going to buy a business through financing. If you're going to buy an affiliate site, I would suggest to try to stay away from any heavy financing. Or if you're going to do heavy financing, have the cash on the side to pay that off immediately if something goes south. Hopefully that kind of like clears everything up for you, Jay Royal. And if, like, again, anybody who has a question, please reach back out to me through the comments. I'm always answering those questions either through video or in the comments. All right. So take care. I'll see you guys on the next video.